Now, a couple of days back, I shared a very short, brief video on this very interesting indicator called MTPC on TradingView. Many of you liked it. And yes, there were a couple of very valid suggestions that this useful thing requires a slightly lengthier explanation with the proper explanation of the settings. And so I thought that why delay? It's very fresh back of our minds with the short video behind us. Let's quickly dive deep into this unique indicator called MTPC. Come, let's take a look. All right, my usual TradingView screen. Actually, it's not my usual TradingView screen. I use Heikin Ashi with a few more uniqueness to it, but this is the usual Nifty Japanese candlestick chart. First, you come to indicators, right? And you type MTPC. This is a built-in indicator within TradingView. They kind of coded it. No, it's a part of the technical section inside TradingView. As you can see over here, multi-time period charts. It's been recently updated, and you click on it. The moment you click on it, you see that your charts automatically has a pillar, a rectangular section behind it. And it's trying to tell us something. What is it trying to tell us? What are we actually plotting here? And to understand this, the best is you go to the MTPC settings. Now, this is where I think I need to spend a little bit more time than I did earlier in that short video. First, let's understand that by default, it comes auto time frame. What this indicator is trying to do is it's trying to show us the price behavior of multi time frames. Anything more than one is multi, but over here, it's essentially two time frames. One, the candlestick charts that you have plotted, in this case, Nifty daily, and one which is behind it. It's generally larger. It cannot be shorter and smaller. It has to be larger time frame than the time frame that you're already plotting. So if my candlesticks are on daily, the MTPC will be more than daily. Now, the auto time frame does a decent job. If you put your cursor on this icon, it tells you that if you plot one day, if the current chart time frame, then it will take the weekly. If you plot weekly, it will take the quarterly. If it's in minutes, it will take the daily, etc. So it does a pretty good job. If you change from daily to weekly, if you change from weekly to monthly, it automatically kind of adjusts. It's auto time frame. So on the daily time frame, it takes the weekly. So you can see here, every pillar, every rectangular box like this is Monday, Tuesday, Wednesday, Thursday, Friday. And of course, if there are 4 days in a week, it will just take those 4 weeks. All right. So this week, the market had gone up. This week, the market is falling. And we understand the weekly range. And within the weekly range, the daily price behavior. But that's not where it ends. We go back to the settings. And let's say we keep auto time frame, or if you want to deselect it, within the daily, it makes sense to keep a weekly. Right? This is a choice. You can keep monthly if you want to. That I want to take a look at the monthly time frame and then take a trade on daily. So choice is, of course, the traders, but daily, weekly makes maximum sense. For the time being, I'm going to keep it auto, because if I change the time frame, it will adjust automatically. Now this section gives us 4 options: high, low range, open, close range, OHLC, and true range. High, low range, which is plotted over here, as you can see, is just showing us the highest point of the week and the lowest point of the week. It's not telling us where is the open, neither is it showing me where is the close. So if I jump to OHLC, I will be able to see all the 4 price points: open, high, low, close. Let's do that. If I click on OHLC, now you will notice that with the OHLC, these pillars have got a lighter section and a darker section. This is nothing but the weekly candle. This is the high. This is the low. This is the open. If it's red in color, of course, this is the open. And this is the close. Which means that this little section is the lower shadow and this upper shaded region is the upper shadow. Fast forward to the current bar. This is the entire upper shadow. This is the small body of the weekly so far, and this is the lower shadow. So, if I keep it OHLC, I'm actually able to visually understand what is happening with or what had happened with the weekly candle and what is happening with the weekly. It's like taking the shape of almost like a gravestone doji and kind of a shooting star, but shooting stars don't come in a downtrend, it comes in an uptrend. You get the picture. This is useful. If you use candlesticks extensively, this is definitely useful. One thing, yes, you are looking at a little bit of an extra information and data. And so the eyes will take a little bit of time to adjust. Also, the chartist, the technical trader, him or herself needs to have a certain maturity to adopt and adjust it. It probably will not click for someone who's just starting his journey in this field of technical analysis. So it needs a little bit of maturity. All right, let's go back to the calculation. What about open close range? So open close range will in that case only show you the body of the candle. It will reject the upper shadow. It will not show the lower shadow. So you're looking at only the body. I strongly believe that OHLC makes the maximum sense. And the fourth one is true range, wherein the true range will consider the high and low, not the candlestick. And it will also consider the gaps, if there were any gaps. Pay attention to this section. Take a look. You see, this is the true range. But if I make it open, high, low, close, or high, low range, you will notice that once I make this change, this area, the gap will be shown. You will be able to see the gap. There you go. So true range is, you will make a choice of true range when you want to encompass, when you want to involve and include the gap ups and the gap downs. Understood? And below this, if you want to, move out of Japanese candlestick chart and you want to display Heikin Ashi, then it will go to Heikin Ashi. And in that case, if you go OHLC, you will be able to see behind these candles how that week's Heikin Ashi is playing out. Last but not the least, use daily based values. If you click on it and if you keep your cursor on the icon, it will explain what it tells you. And this is what it is. Multi-time frame. We're looking at one time frame and a higher time frame at the same time. It's your choice. You can keep candles, or candles, Heikins, and it's definitely your choice. How is this useful? For whom is this? And let's end this video by sharing how am I using it. This is for someone, the trading style and strategy setup is wherein you consider the higher time frames information, most of the time trend and momentum, and then you trade the lower time frames. This is ideal for pullback trading. For pullback trading, we want a strong trend, hopefully with momentum. And during these trends, if there are any short-term corrections and it goes up, that's where you would like to buy. So buy on a dip or sell on a rise in an environment where the primary trend is up or down. So to visually understand the primary trend, you now don't have to move or toggle from a daily to weekly. Within the daily, I can make sense of what is happening on the weekly. Within the weekly, I can make sense of what's happening on the one. So this is for that purpose. It solves that purpose visually in one particular look. And I find value in it. I've found, in fact, extensive value in this. So this is for someone who will include 2 time frames. That's number one. And how am I making good use of it? Now, for me to explain this, I will have to go to Heikin Ashi candles, because if you follow my work, I am certain that you know that I use Heikin Ashi. So I'm using Heikin Ashi as my chart as well as my MTPC. Now this is where I have spent a little bit of time. My charts looks more or less, you will figure it out. It will look like this nowadays. I'm not going to go into details of the proprietary indicators which are shown here. TradingView is kind of taking a little bit of time for the charts to populate. Sorry for that. There you go. And so my charts, the way I have kind of using a combination of MTPC, now it has opened, and the Heikin Ashi, as you can see, it's much more clearer than what we were looking at. This one. You agree? This one and yeah, this one. So what you have to do is spend a little bit of time and fix the cosmetics. What I mean is you have to, number one, you have to make sure that your candles are really bright and it stands out. Let's say I'll go blue and red, let's say, for a change. So I'm making my candles, the time frame, stand out. And then what I'm going to do, I'm going to tone down the MTPC. I'm going to go to that MTPC, and over here, I will tone down the look of it. So what I'll do is, if I do this red and blue thing, let's see what happens. Okay. And then if I reduce it to 0, let me see. So this, the area, the border, I don't need. Now over here for 30%, I can, if I reduce it to, let's say 12%, what happens? This looks interesting. And let's say 12% each. So you need to play around a little bit with the transparency, with the color. And see, this is far more cleaner and clearer. You can clearly see how the Heikins are playing out, how the Heikin on the higher time frame is playing out, etc. etc. Of course, there are more use to this. On my template, I'm using an RSI, a short-term RSI. And I have these next golden bars. These are my triggers. These are where the trades actually, a probable trade, not exactly always a trade, a probable trade takes shape. Last but not the least, I'll finish this video by sharing this with you, that when you keep your cursor, let's say I'm looking at this chart, okay? And I want to focus on the MTPC. All that you have to do is bring your cursor on the body of the MTPC. Just take your cursor and keep it on the body of the MTPC. The moment you keep on the body of the MTPC, you notice that the candles go muted, the candles go behind, backwards, and you can clearly see what's happening with the higher time frame. This is a very small but very useful technique. At the beginning, when you're trying to adjust your eyes and visually able to see the charts, 2 time frames together, I think this is definitely useful, right? So this was my longish take on this MTPC indicator. Thank you for liking the shot and suggesting this work. I hope that this will conclude your doubts, queries about this indicator. If you're using it, do let me know if you find it useful or not. Till then, take care of yourselves and definitely trade well.